I know Stel is trying to get in here. So it's me and
That's
you, Blake.
about it.
Oh, you're here. Okay, I thought you were having trouble getting in.
I'm so glad Stelios is here.
Where is everyone, Blake?
It's holiday. It's
Oh, that's
it's
right.
May Day in the UK. It's Labor Day in a lot of parts of Europe. In Greece, it's always a holiday.
Yeah, that's
well,
true.
It's a holiday, but I'm here committed, opposite to Steve, who's slacking off somewhere.
You should be committed
to an asylum.
Anyway, silver showing some pop compared to gold. Haven't seen a day like this in a while. Silver up 20 cents, gold flat to lower. This gold silver ratio, all it did was consolidate. Looks like it wants another new low here. So
yeah, it's going to be a big week this week, and I think daily moves going into the Fed, we're going to have to take them with a pinch of salt. Yes, silver and platinum are outperforming today, but I think this is just noise ahead of the Fed and ahead of NFPs. We have the ECB as well. It's going to be a very, very busy week.
Look what platinum's holding, bro.
Is it holding the channel?
It's holding the breakout, yeah.
Yeah.
Right here. So kind of good or bad from here.
We are on the verge in quite a few instruments, and gold as well. Okay, silver and platinum are have broken out of channels, and they're trying to retest. Gold hasn't, but it's only about, I've said before, about 4% from its all-time highs. That's not that far. And also the Dixie that you showed before, those lows about 1 point below here are absolutely crucial. So 100.80. But yeah, I mean, it's going to be the FOMC this week, no doubt about it.
And ECB, right?
And ECB, yeah, but it's going to be more. I think more about the FOMC.
Yeah.
Yes.
Any guess? Is he going to hike? Is he going to hike and then say pause, or is he going to hike and say nothing about a pause? Because I guess the big debate is the dot plots mid-year that show the market is starting to cut rates, and
that's the main thing. Absolutely. Yeah. And we're still pricing 75 by February, which is a lot. So that's what I think. My view is they're going to hike 25. They're going to be relatively neutral on the statement, but I think the guidance is probably going to be that look, guys, unless inflation goes down to 2%, we're not even going to think about cutting. And also, given that the banking crisis, or whatever you want to call it, seems to be contained for now, with JP Morgan buying First Republic or doing some kind of deal for them. The crisis is kind of taking a step back and not with us anymore. So as long as that's the case, what's the only remaining problem for the Fed? Inflation. As long as inflation is not at target, I don't think they're going to be cutting, right? There's no reason for them to cut. So I think this is probably going to be the last hike, but I don't think they're going to be cutting this quickly as the market expects. That's at least with what we know today. Things could change tomorrow, obviously.
And, perhaps they don't talk about cutting; they hike, but then the market gets a strong NFP Friday, and the market decides, maybe the Fed can't ease in 3-4 months because of labor.
Yes.
Right.
Yeah.
So that's going on, and I don't know what you guys think of the index. What Blake has as upside. Everyone's going to be looking at a 42 breakout. We'll see if we get it. I don't know. I just come in here before these two central banks and say, why should I do anything until then? Unless I think I could just, accomplish it in 48 hours. So interesting that, I'd like to ask Blake about Euro Oz. Could that be turning the Euro Oz with the last few days of Aussie holding up much better than Euro? Is there a message in that, Blake?
Yeah, well, I mean, I think it's just with stocks, holding up. I mean,
Okay.
look, we're not too
So
far from
risk
4,200.
on.
So,
Yeah.
so there's, yeah, I mean, I've been buying. I just started buying the Euro New Zealand. So the Euro Aussies next on my list. I traded them to the long side for, quite a big. It was really, really some of my better gains of last month, and I'm thinking about buying the pullbacks here. So I like them. I mean, the Euro Aussie, I actually just updated the chart on the ForexAnalytix platform this morning. It is a bull flag pattern developing.
Yeah, I see that. Or Grega would say ABC. And
you could say it's
maybe this is 4. After a big advance, this is 4, and we get one more thrust, and that might
could
be
be.
it.
Yeah.
What's on your radar, buddy? I didn't watch your week ahead.
Well, first of all, we have, it's going to be a big week. We have the Fed. Do you want me to take over the screen here?
Okay.
Well, I just wanted, in case you had something else that you wanted to show.
No.
Okay.
Really not much. I wish I could be more creative. I just don't have a lot to say this morning with this board.
Yeah, I mean, well, it's slow. It's Europe, so I mean, Europe's out today, and it's going to be a slow. It's going to be probably a fairly slow. Well, I wouldn't say it's going to be a slow North American session. It was just a slow European session. And going back to like the Euro Aussie, just so you guys can see it here. Here's the chart, and this is kind of what I'm looking at with the Euro Aussie. Nice bull flag pattern. You got to keep in mind that this one's breaking out. So there's a horizontal breakout here. If you're not aware, it's down here at 164.50 roughly.
Yeah.
So while we're above that, yes, we hit channel resistance. That's the whole reason why I sold it, is when we were up here last week, around the 168 level, I got out of my longs, and I'm looking to reestablish them. So I have not bought the Euro Aussie yet, but these are the ones that I'm buying, is because they are in breakout territory, like the Euro Kiwi. It's above the 50% retracement. We're pulling back, a little bit here, but I still think they're all very bullish, and they're bullish in a stock market that is bullish. So if we turn bearish in equities, it's going to be, it would be ugly if we turn higher from these levels. So anyway, that's kind of, those are on my radar right now. And speaking of which, we should probably talk about like the dollar yen. You said that it hit the 200-day moving average. I think that's a really good observation, Dale. It's something I didn't bring up in the week ahead video, but I was looking at this resistance as we're up here in the channel resistance. I think we will, we're ripe for a pullback after being so overbought here. But you got to buy dips, because it still has a bull flag pattern now that points, another 100 pips higher than where we're at roughly.
Okay.
So, I still think it looks bullish, but you just can't, I don't think you can, just chase it higher. You got to, look for dips and try to, buy it on a dip, at least for now. I mean, if we get back below like 135.50, then, then maybe the narrative changes a little bit. Maybe it's a yield story. Maybe it's something the BOJ does. What I also noticed is all these other yen pairs too. I'll give you an example of the Aussie yen here, which is really one of the ones that just isn't. Where the hell is it? Oh, here it is. One that's challenging, like an underside of a this long-term broken trend line. You can see it right through here. Yeah, I mean, we're just challenging the underside of that trend line, and it looks like it broke out. If you weren't paying attention to it, and some of you may not have looked left that far, you may have just looked at this and said, "Oh, it's breaking out," and now why is it stalling? Well, that could be a reason. Canadian yen just did a little breakout above the highs, but how about if it starts to fail here? So there's a lot of the BOJ, I think, is a big deal. What happened last week, but we also saw that they are changing their verbiage a little bit, and by removing verbiage, they're changing their messaging. And even though that you saw position changes, you had people had to exit out of their yen longs that they had, and there's going to be some position squaring. Now that we're kind of past that, I think you could get some two-way price action here in the end. So one of the other things, I'm actually surprised that yields are up a little bit this morning. I'm not sure if you saw the headlines while you and Stelios were talking about First Republic. JP Morgan said that they did not seek out that deal. Yeah, it was kind of approached to them by the FDIC, which I find rather interesting. So
yeah, they, in the great financial crisis, a lot of things were shoved down banks' throats that they had to do.
Right, exactly. Yeah, so I mean, they said they were invited.
Okay. Yeah.
Invited. Yeah. Whatever that means. So Stelios, you're not out today with the kids enjoying the holiday.
No, I'm here with you guys. Lucky me. No, I'm kidding. It's not a holiday for us, right? So I mean, for the US. So we are here to serve our clients.
There you go.
Yeah,
I like
there
that.
you go. No, I'm obviously it's going to be a big week, and we really shouldn't be making too much of today's price action. There are a few things moving, like cryptos are down while metals are up. Figured that one out. But what really amazes me still is stocks, and I've said it for a while. I've said that I think the path of least resistance is higher. And look what the S&P did on Friday, and where we took out two levels of support. So first we took out the sorry, not Friday. When was it? The Wednesday it was. So we took out the first one, which was 41.10. Then we got down, we took out 40.70, which was another important low. And we've come right back up and taken those two levels back. And there you go. And or close to that. Yeah. And that's really strong. I've said this on Friday. I said it. I'm going to say it again. If I was short, I would be really, really scared. So equity is very, very resilient. What's going to take for them to drop, to have a proper leg down? And I keep asking myself this question, and I think the only thing at the moment that okay, apart from the Fed going another 200 basis points higher in rates, which I don't think is happening, some kind of this First Republic and what was it, the SIVB and all those, if we get another kind of wave of failures, then I think that could be enough reason for people to panic a little bit and equities to sell off. How much would they sell off? That's a difficult question, but I can't see any other scenarios where equities are going to be selling off at least considerably in the near future. What do you think, Blake?
Well, and Dale, I'd love to hear your thoughts here. I mean, we've had a really stellar earnings season, or stellar.
Bingo.
That's well, I wouldn't say stellar. Stellar's probably not the best way to describe it. Not so
better than expected.
Yeah, exactly. And we have Apple coming up this week. Now, there's other earnings too. I think Apple's going to be the standout on Thursday. And that's going to be kind of one of the things that the market's watching. Obviously, if you look at Apple, and Apple's trying to break out, I mean, that's the thing I think we should all be looking at here. I mean, it is, it's attempting to break out, and this breakout might be sustainable after this week, and that itself could be the catalyst that drives the S&P above that 4,200. But we have the Fed, and I think everybody's expecting the Fed's gonna raise rates by 0.25% or 25 basis points, and then they're expecting the Fed to keep rates steady for a while. But again, the market's still pricing in rate cuts as we go into later into this year. And if the Fed kind of leads us to believe that it is possible that they could lower rates if needed, which I don't believe they're going to do. I don't think any of us believe that they're going to do. But if they still give the market that idea that they could, Maybe that's the catalyst that drives us higher. You know, one of the other things, and I found this rather interesting, you know, because one of the people that I meet with every week is one of Dale's, is because of Dale, Mr. Jim Welsh. I really like Jim, and I know you. How long have you known Jim, Dale? 30 years?
Yeah,
Roughly 40.
Yeah.
Wow. And
Yeah.
he's a really, really, really sharp guy. I really like and enjoy my time with him, meeting him every week. You know, he's and I think he's just really sometimes really just ahead of the curve.
Yeah.
He doesn't think that he thinks we still have months of job creation and growth before the labor market eventually rolls over. So, you know, we do have the jobs report this Friday. And on Friday, we are expected to create, I think is 180,000 jobs. I had to go quickly and look. That we're looking to create 180,000 jobs. And you know, maybe the jobs picture continues to show that it's fairly robust. I mean, those are things that can really still support the market overall. So I hate to be bullish up here just because I know we're up against really key resistance. But at the same time, I think it's a little too early to be bearish, right? So, you know, it's a tough one. It's a tough one. What are your thoughts, Dale? Do you think we're breaking higher? Stelios does. I mean, what do you think?
I think that it's two scenarios, and it's all kind of based on the presser. But there's still one more bearish count left, or up around the 43.14 level. We'll see. It looks like it wants to do that. What's that? Another 130 handles or so. Maybe it does that if the Fed talks about a pause.
Yeah, I
Which,
mean,
well, that could be.
Yeah. I'm sorry.
That could be it. And one more break in the dollar. I mean, in a perfect world, what I would look for is one more break in the dollar, which should lift everything.
Which,
One
by the
more
way,
time.
it does look bearish. That was the one. I think it is on the cusp of breaking down. The dollar is. So
I think it's going to be a false breakdown under 100.
You think so?
At your
Yeah.
99.5 level, Blake, that you've had for a few weeks.
Yeah.
Last time there was no divergence at new lows. So I'd be looking for new lows in the dollar, continuation in S&P, and turn in the dollar and failing rally in gold. That's the way I'm coming in this week.
Well, you know,
I think if gold isn't making a new high with the dollar making a new low, I'm going to be shorting it.
Okay. And, you know, speaking of, and I don't actually, I completely agree with you. I don't know if I'm too excited about fading the dollar, but if we got some sort of false breakdown, right? Because I mean, this is key. I mean, you can actually see it. Let me
like 112 is real big in euro. I mean, there's major moving averages there. There's a count a little lower. So the euro looks pretty clean up there. That if the advance continues, that would be a problem up there.
Yeah, you know, the argument I have about like the euro and like the sterling, and this is the thing that I've, you know, made a point of last week. These aren't pulling back. And when you think about, and I'll draw this out for how I drew it out for everybody on, you know, the morning edge every day. You know, last week this is kind of like the basic explanation that I give to people is, you know, if you take the cable, we have, you know, obviously resistance, you know, so people start selling as we, you know, get through here. Then we find some sort of, you know, buying level. Okay, you get long. Then you get back up here and you're like, okay, well, you know, resistance is holding. So, you know, I'm gonna sell, and I'm gonna get short, and I'm gonna sell all my longs. We get back down here and you're like, oh, look, you know, a little false breakdown, you know, should be all the reasons to start covering. And, you know, you get long, and then you get back up here again. You're like, oh, here we are back at resistance. So I'm going to start selling, you know, I sell my longs and I start getting short. And then all of a sudden that prolongs. And then if you were expecting this and you're like, you know, why haven't we sold off? The longer we sit up here, the more likely we are to break higher. And that's what's happening right now. So you're getting those, you know, whether it's institutional or hedge funds or, just individual traders that are like, oh crap, I might actually need to cover my short here. And so next thing you know, you get this squeeze higher in the market, and that's what's happening with the cable. You get a similar situation in the euro. Got the euro's got a little cup and handle pattern developing. We make it much above 111, and we could really see a squeeze. So that's why I'm not super comfortable about trying to fade the dollar yet, but because I think everything's just kind of prepped. But can the euro, you said there's a bunch of moving averages up around the 112 level
I think it's weekly.
Oh, let me see.
Big pictures.
Yeah, you're right. There's the 200-week moving averages right up there.
Yeah.
But yeah, you start seeing a move, and let's I guess let's go back to the weekly chart really quick. Let me see if I can do something for us. Let's drop a fib from the this major move lower. You got 112.50 roughly is going to be the 618 retracement. Just above there, it's doable in my opinion. If we do get a breakout, seeing the reaction once we get up there will be interesting. So I don't know, Dale.
As I said before, guys,
go ahead.
Sorry to interrupt. As I said before, we are at very pretty key levels in quite a number of instruments and important ones. So the Fed once again is going to be the key for the next leg. And the way I look at things like the euro dollar and cable, I mean, it feels like the path of least resistance is to go higher on those. So I'll be very careful trying to fade those. And remember, if you are taking a trade on those before the FOMC, you're taking a gamble on what they're going to say. So if you know what they're going to say, great, good for you. If not, then you are taking a gamble, just so you are clear on the risk you're taking.
Yeah. And Mike asks, hey, what do you think? What about the dollar yen? Well, the dollar yen, we're up against some pretty key resistance here. I mean, you look at the channel resistance that we're knocking our head up against, the 88% retracement at 137. I think that was the high overnight, so we're really just kind of brushing up against this. And, if the dollar does come under pressure, and you see the euro, break out above, 110.50, why can't the dollar yen slip back down towards this 135.50 level, which is a breakout point of this bull flag pattern? I think this bull flag pattern is going to eventually see 137.60. That's its target. So I don't see any reason why it shouldn't reach it. It's just not going to be there in one fell swoop either. I think one of the other issues that the BOJ or the dollar yen has, and this is something that K-Man mentioned last week, which is really an important concept when you're trading the yen. And one of the things that one of the reasons why I didn't just start shorting the dollar yen on Friday is because, you have to give the institutions time to get out of if they were short dollar yen, they have to reposition themselves a month for, later if they think that the BOJ is going to make a move on policy. Well, they don't want to hold that negative carry for the next, month and a half. So what they'll do is they'll cover up their positions and start reestablishing them at higher prices, wherever they see fit. But you got to give the market the opportunity to cover up those shorts. And I think that's what we've seen the last, couple of days ever since Thursday night. So Friday, and then going into today. So this is going to be a harder sell. I think, for fresh yen shorts, I think most people will be looking at, seeing how we react up here. But anyway, that's kind of how I feel about the BOJ right now, or the dollar yen, right now. But all these other yen pairs are still, they're still chugging along. So you should keep an eye on those. So Stelios, you talked a little, and I want to bring it up really quick. Gold's really pivoting, and you can see it bouncing aggressively off of the channel support. It's one of the charts that I threw up this morning in the chat room. It's like, man, this is really big support here, and you can see it's really bounced from there, even, you know, over the last hour. It's just took off over the last 15 minutes. These precious metals look good. I mean, you know, they look at silver ripping.
Wow.
Yeah, yeah. I mean, there is a detail about silver. There's been, you know, there's this silver squeeze movement that's been going on for the last couple of years, and they've been talking about May 1st being the day that they go out and all buy as much bullion as they can. So maybe this is part of it. Maybe not. Maybe it's people anticipating this. I don't know, but I wouldn't put too much importance on that, but metals definitely looking good. Gold, our friend is asking, you know, where do you wait? You know, where do you? We had a friend on the chat room asking, where do you buy? You know, on a retracement, and I said, look, you know, there's two levels right now. There's 1970, which is the previous lows, and we have quite a few wicks at around daily wicks at around that level, so 1970-ish, and then we have the we have the 50 DMA, which is slowly going up and converging towards the 23.6 fib retracement, which is at around 1947 or so. So those are two levels if you want to be looking to add, but or to get long. But man, they are looking really strong today. And remember what Steve said on Friday. Sorry to he said that I think we might miss this move, and I want to buy silver right here, right now. And I hope he got some because it's gone up quite a bit.
Yeah, I mean, look right where you're at, which is right here, 1997. Yeah. I mean, your risk is here. I mean, if you're buying it right now, you know where your risk is, and your reward might be that, you know, 2050, or maybe it's 2070, where it's, you know, matched the other highs. I mean, from a risk reward perspective, it still looks good right where it's at. If you're just like, hey, I'm going to swing trade it. Stops are below 1970. I'm targeting back at the highs. Well, I mean, it's a 1 to 3 risk reward ratio. If it gets above 2000 and you're finally like, screw it, I'm going to get long. Well, then you got a 50-50, you know, or a 1 to 1 risk reward ratio. That doesn't make so much sense up there, you know. So, and it made sense if you were in the ForexAnalytix chat room an hour ago. Today, it makes a little bit less sense, but still makes sense. I mean, it's still, you know, decent risk reward. I mean, and that's what it all boils down to, right? You have to look at it and say, where do I need to get out? If I'm wrong, which there's a good at least 50% chance that you're going to be wrong, you know, where do you get out, and can you manage that loss? And if you can, well, hell, go for it, you know. So anyway, and keep in mind that we do have manufacturing PMIs, or is it manufacturing PMIs today? I believe it is, just to confirm, it is the ISM. Where am I? I gotta go all the way back.
Hold on. Let's have a look. Manufacturing PMI.
Yeah, manufacturing PMIs will be out in about an hour and a half. So that's probably going to be the catalyst and the mover for today. But remember, we got Apple this week. We got the Fed. We got, you know, we've got non-farm payroll. We got a lot of things happening this week. So if you all are in, you know, if you're in Europe, you're just kind of listening in because you knew we were going to be here. Just be ready for some more activity tomorrow. It's going to be a little bit more active. It is a Chinese holiday this week, I believe. If somebody said it, and I think I heard that over the weekend as well. Anyway, it should be a little bit busier going into tomorrow. I want to thank, you know, Dale. I know you have an interview today, so I want to thank you for being here, even though it's you know, Europe's on holiday. You kept us entertained, and Stelius, we appreciate you being here because I know most people are out, so thank you.
Good to be here, guys.
Thank you guys.
Thanks.
And really, you guys here, check out the trader check out the trader funding program. And oh, you're welcome, Bruno. Yeah, I don't know how active Jim is on Twitter, but yeah, that's his handle. So I'll talk to you guys later tomorrow. Thank you.
Thanks, Del.
Thanks,
all right,
Coach.
guys. And you're very welcome. And Steve Miller, it's been a long time. Looking forward to seeing what's top of mind for you. Haven't talked to you in about 4 months or so. How are you, Steve? How are you doing? Asking you to unmute.
All right, unmuted here. Hey, Dale.
All right. Hey, buddy.
Hey, good to
How's
talk with
life?
you.
Yeah,
Hey,
how's life?
great. It's great. You know, I live in Florida, which is a beautiful state, and 80 degrees and sunny today, so it's beautiful here.
Nice. How about water temp?
Water temp, I have no idea. The pool's
Okay.
90. Pool's 90.
Oh, okay. All right, buddy. So, I remember from our last talk, and you were pretty accurate on calling a low in the VIX, and
Mhm.
it happened right around that time frame, and we did have a nice pop to 31. I also recall that certain levels that we're achieving were lower probabilities for the S&Ps to recover back to 42, 4,300, but looks like we may be attacking that level.
Yeah,
So
actually,
what's on your radar, buddy?
well, what do you want to talk about first? The stock
I don't
market?
know.
Is that? It
Yeah,
seems like
why don't you put up some charts on your screen share? I love your
okay.
technical work, and
I'll do that. And when you say that the market coming up to now is a lower probability, up close to this 4,200 level, I would say that, maybe that was a short term, but our target for the year was 4,300. And we thought that this would be a bull market year. So you should see my S&P weekly chart here.
okay,
Is that showing?
that's what we have. Yeah, a
Okay,
weekly
good.
chart. Yeah, well then, and look, things change.
Yeah.
But I do recall the last time we talked that you still thought that the October low was not going to be the low. So when did that change?
So what happened was that now what I'm showing you here is the cycle analysis right in here. This low, which was very much on time for us in October, and you could see the cycle brackets on the bottom. The probabilities when we talked out over here were that were probably about 50-50 that it would take out this low right here. But when this formation came right in here, and it was not taking out the low, it was hitting support zones, then that told me that this was more of a base and that the actual low was right over here. So we told our members right over here, and we have two videos up on YouTube, part 1 and part 2 of the year end, saying that basically our projection for the year was that it would get up to around 4,300 and that this would be a bull market year. So it was right around the first of the year when we had made that upward adjustment to or upgraded the stock market. And now what we're looking for is basically the same thing as we did 4 months ago, which was that the stock market would rally up into this area of around the first resistance around 4,200, and then extending out into the late summer, early fall, up to this area somewhere between 4,300 and 4,360, which we think will be the bull market peak at that point. So the what we believe is that this is
your cycles are inverting then, because your cycles show a low in between September and October, and you think it's going to be a high.
We think that the high is going to come out somewhere over here. It could be in that next cycle over there, but you see the cycle low that's pointing right over here. Yeah. You see that I don't have this adjusted down yet. We're simply adjusting to price levels at this point. So, but eventually there'll be this will show a downturn probably into this area right here. We're looking at a VIX peak somewhere around August to November, somewhere in there. So we don't really know yet. It's too far out for us to project on that right over there. So that's why we don't have the downturn shown in there right now. But if you look at a shorter term right in here, this is spectacular cycles that you see right in here. Let's just look at these last 5 cycles that you see right over here. So what we were looking for was a minor pullback. Each of these yellow areas are where the downside corrective areas are in the cycle. We call these the nesting areas right in here. And this was a super bullish cycle, the way that this was configured. So we had believed that there was going to be another upward move going up towards that 4,200 level, which is this major cycle peak resistance zone. So we still think that's going to happen. And then there is this declining period right over here that points out to late May. which we think is going to be a bigger decline. The reason for that is that it aligns with the European markets pulling back and the Russell making its a very, very important low, which comes out there in late May. I'll show you the Russell chart right over here, which is pretty
really
phenomenal. And this is, we've been looking for the Russell to come down and test this low down over here. And this is the low timing period right in here that we're looking at in the Russell. So that says to us that sometime late in May or to early June is where this Russell's going to come down to. And with all the, the banking problems and the weakness that we see in the financials, that's really affecting the Russell. So we think this Russell is going to pull the market down, the stock market, in a mild way into that late May to early June period, and then be moving up again into that late summer period. I'll go back to the S&P 500 here, into that time frame out in the late summer. 4,300, 4,360 is that upside target in the stock market.
Okay.
So what we really believe is that we have a cyclical bull going on in a secular bear market that will last for a decade. So this is just an upward retracement, and this, you can see the major 61.8% right over there. That is of this whole decline that occurred here. That was some 26% or something like that. And now just now getting up towards that 61.8% right up over there. That's probably about the best that we're going to see in here.
Okay. All right. What else is on the radar?
So I heard
a high degree of conviction.
I heard you talking a lot about the dollar and foreign currencies early on, and I think that's been a big focus of yours, and how that relates to the gold market. I think that the dollar is in a collapse mode. Now, that doesn't mean it's going to happen immediately, but what I think is going to happen is that the dollar is in major trouble. This de-dollarization is not just a word. It's something that I think is very significant, and I think it's going to affect the dollar in a very major way. So what I want to do is I want to bring in the monthly chart on the dollar for you to see right over here, which I think really tells an important story. And you could see the magnificent cyclicality that's in here on the bottom. These are showing the harmonic families. And you can just look at the intermediate one right in here, right there, and right in here. And you could see how the cycles follow that perfectly. Right over here, we were very bullish on the dollar. And you can see that the momentum turned up. This is our reversal scout. And once the momentum turns down, as you can see right over here, it's in a lot of trouble. This period out over here, which is really the late 23 out through late 24, is a very negative period for the dollar. And I actually have a target in there of around 90 to 92 on the dollar during that period. And we've been actually very bullish on the precious metals, and I'll show you that. So this is the dominant sense that I have that the dollar is in a lot of trouble, looking at it on that monthly chart. On the weekly chart right over here, you have a confirmation of that, because when it hit this low here, just at around 100.80, right over here, it equaled it again, or just basically barely took it out, and it's just hovering down over here again. We have our momentum conditions as negative right over there, looking at that. And I'm going to take this even down another step from the weekly to the daily conditions right over here on the dollar. And this is where we expected a minor rally to come right in here. But you can see in here, this is the slim ribbon, and that is negative. You could see the slim ribbon PO on the bottom giving all of these negative signals. And I'm going to dive down even a little bit deeper on this and show you another chart, which shows you the relationship between the dollar momentum conditions on this chart and the gold market. So this line right over here is the gold market that I'm highlighting. And you can see the green areas are dollar positive momentum right in here. And when the dollar is in positive momentum, the gold market is usually moving to the downside. as you could see right there. When the dollar is in negative momentum, which are these red areas right over here, then you can see that the gold market is usually moving up. Well, the dollar is not able to escape this negative momentum right in here. And the gold market is just finishing a consolidation in here. This looks to me, when I look at this with negative dollar momentum and the gold market, and I'm going to switch this over to gold /GC for you to see. You can see the cyclicality in here is just phenomenal. And this looks like this major support right over there, which we have listed as a buy zone. It's not able to get down over there. I've really been, have my thumb on the buy trigger when it gets under that level of 1975 approximately, to be buying it in that zone. The cyclical patterns have about another week, and it may dip down in there. But with that negative dollar momentum and this strong configuration here in the gold market, this is extremely likely to be ticking up again. We're projecting all-time highs in the gold market over the next couple of months. So this is getting really to an important area. So, I mean, basically the summary of what I just gave you is that the dollar is in terrible shape. The dollar is likely to accelerate to the downside. First support is around 99, and I think that might be just a temporary break where it then gets another bounce back after it trades 99, and then sets up later in the year a major decline in the dollar and probably a major advance in the gold market. You can see in here in the gold market on the
Can we
weekly
bottom
chart
down there, Steve, and then rally to 109, 110 in the Dixie from 99?
I think that is no chance of that at all. I would give it a 5% probability. I think that you could, you could get down to 99. Maybe you could bounce back to 103 or 104, but then I think it's 92 by sometime in the following year. So you can see this gold chart in here. I mean, it just, the most likely thing is that it gets up here, takes out the all-time high, has some kind of a correction. And then during that period where the dollar really begins to accelerate down, the gold market really moves up. And our gold target for, and in fact, I could show you the gold monthly, which I think is important to look at. Let's see if I have that available here. To switch over to you really quickly. The gold monthly chart is just phenomenal, which sets up, you can see what we looked for during these periods of high risk. This one right in here, we were very bearish on the gold market right there, which was the same period we were bullish on the dollar that I showed you. But now we're in this period of upward rising conditions. This is just simply 6 months of the beginning of what is 3 cycles pushing to the upside. Gold market, the lowest target I have for it really in the next couple of years is 2,300, but it could really get to our extensions up there. And that's the peak of that is around 2,700 in the gold market, that target zone. So I think we're in for a period of very significant decline in the dollar, very significant buying in the gold market, outside of what are likely to be periods where there are, bounces in the dollar and pullbacks in the gold market. But I think that it's all really written already.
Do you think do you think that the miners are going to begin to outperform the metal itself?
I actually do. As a matter of fact, what often happens is that the miners begin to move out ahead. The silver market is equally as bullish based on the patterns, but when I look at the copper market that is really heavy based on the economics that are out there, then it has me wondering whether silver is going to do its typical outperformance. But I would be long GDX and the silver miners also, and of course GLD and SLV. I mean, I just think that the probabilities are so high that there's going to be a very significant upside move. These formations that we're looking at in here are just absolutely super bullish. And I don't normally get into where I'm saying I'm not an alarmist. I'm not the type of analyst that will say, gold is collapsing, because because of whatever. I just look at the technicals and then kind of bring the story into it. De-dollarization is happening. The rest of the world, 19 countries lining up with the BRICS. At some point, they're going to have their own currencies. Right now, it's almost like there's a barter system out there because it's just a total chaotic mess out there in the world with who's doing what transactions and what currencies. And the BRICS are going to solidify that. That's why they've been buying all this gold and silver. And I think that you're going to see a very significant thing going on. And remember, if this analysis and my interpretation of these movements are correct, the only way that this country now can defeat or try to fight against a falling dollar, which I think is very likely, is by raising interest rates. So the probability out in the next couple of years of much higher interest rates, I think, is very high, independent of what we're seeing now for the Fed this week or in the next few months, which I think is just going to simply be a pause.
Okay, I've seen a count where the 10-year could fall to about 3%. And then be making in a way 4, and then making new all-time highs into the end of the year.
So we're going to look at that right in here because what you're saying is really so interesting relative to my analysis. Because let me just maximize this for you.
Because it concurs. Because it concurs.
It concurs unbelievably closely. Because look at these brilliant patterns that are in here.
Okay.
I mean, you can see right in here, there's your 3% right there. The timing is in July.
Okay.
Right. And the bond markets are forming in bullish patterns, and everybody is anticipating a Fed pause and then a Fed pivot. There is no pivot coming. There's no pivot. I mean, there's nothing that says that the Fed should pivot out there. Yes, the economies could slow down. We're going to get probably in a period of stagnation and stagflation. Inflation is not going away. And the likelihood of this downward zigzag that you see right here is high, with a move down to this period right there around, I have it just under 3% as a target there. Yeah. Right. And then when you look right over here, that next cycle takes a hold right there. And then you begin to move up right over here. And very likely that target over there will be the first one somewhere around 350, 357, something like that. And then probably even higher than that.
Okay.
That's amazing. That lines up exactly with what
I told you last time. I have a camera in your office. So how about oil? It's been kind of a strange duck with
it has been,
stuff going on.
My oil analysis changed recently because the cyclical patterns were a little bit longer. I expected this to come out a little bit further on the downside, but then the shape changed and it was all about OPEC plus. And them making that abrupt change, and it really has to be about how Saudi Arabia's opinion is changing about their ties to the U.S. and now getting close to Iran again and selling oil and things other than dollars, and the new coming of the petro yuan. There's so much going on out there. It's incredible. And this oil pattern now has bottomed, as you can see right over here. And that looks to me like it's in support. Now, if I look at the shorter term right in here on the oil market, this looks like it could be gyrating to the downside over here sometime out into end of May is where this projects right there. It's in some support. It's likely to get a rally up back in here towards 78 to 80 and then move down again. This says May right over here. It says May 31st as the bottom of that cycle. When I go to this cycle right over here, then I can pretty much project that this correction comes out somewhere over here to May 31st, and then you get another attempted move out over there in the weekly pattern. This is important support over here. I don't see it really getting under this area of 74 down to about 71.5, and then beginning to move up again as per this pattern shows right in here. Probably a lot of range.
Okay, I have a couple of requests. Can you share your VIX and then if you have anything on Bitcoin?
Yeah, sure. Here is VIX right over here. And here's the weekly pattern in VIX. And these weekly patterns, actually, you can see in here, we're reviewing a bigger cycle, and they both come down right over here. This really points to the VIX low coming somewhere out in this first low coming out somewhere in late May, maybe the third week of May. And then we're looking for kind of a sharp decline into early June in the stock market. As I said, that would give you a rally in the VIX that would be temporary out here into early June, and then coming down again in that VIX right over there. Here's the, that's the weekly. This is the daily pattern right over here. It failed right where it needed to and coming down. And this VIX points out to June 2nd as continuing to move to the downside. So it could be plus or minus maybe 5 days there in the VIX. Bitcoin /BTC that you see right over here. Let's just go to the weekly first. And that is our upward projection was up here, getting up around 31.4 to up here around 32.4, 32.5. And it probably still is in that case. The outside here was a move up to about 35.6. Now, I'm not a bull in Bitcoin or crypto. I think there's a massive wipeout coming in it somewhere down the road. You can't have 25,000 altcoins out there without a washout. But right now, the patterns have been bullish, and we've been bullish on it because of that. Now, when I look at the short-term pattern right in here, this looks like it's in a correction, and it's just really moving sideways right in here into these support buy zones. This comes down to about 26,760. This is 25.5, let's say, right there. This is about a 2-week time period. So if it pulls down for the next couple of weeks into that zone, then we'll be looking again for it to get up above this last high, which was 31.4 approximately, in this next rising phase. So that's the daily right there, and this is the weekly. Note in here that the weekly momentum based on a reversal scout is very positive, that you can see right over there. You can see right over here that the momentum in here has been going from very positive, and you can see these upward resumptions on momentum there that was showing you, to neutral right in here. Now actually just clicking neutral and positive. So it's not giving up any of its momentum really. And the overall sum of the evidence suggests that a minor correction in here under that level of around, 26.7, 26.8, that's just a blip, and then moving up again.
Okay. Great review, and
Well,
really
thank you.
appreciate it, Steve. You want to let people know how they could follow you? There's
sure. This is at
saying that
this is AskSlim.com right over here. Just go to AskSlim.com to our website. There's a ton of things on here. We have 5 membership levels that you can be a member of, AskSlim.com. Any questions that you have, write to Matt, M-A-T-T, at AskSlim.com. He'll be able to answer those for you, and we even have specials for first-time members. So if you want, you can look at our memberships, write to Matt and ask him for a special, and he'll be glad to send that to you, AskSlim.com.
Thank you very much, my trading warrior brother. And
okay.
we have your handle up and everything for people to respond. Have a great spring trading season, and I'll talk to you later in the summer.
Hey, thanks a lot. Take care.
All right, everyone. Okay. Steve Miller, Ask Slim, and tell me there isn't a lot of hard work put into these charts. So that's a wrap for us today. You can join the team. What's left of it today, with Europe being closed, parts of Europe being closed, in call it 18 minutes on the morning edge. Hope everyone enjoyed. Steve, see you guys tomorrow for Turnaround Tuesday. Don't just count your pips, count your blessings. Adios.